Tracy Thuraman, and this week Real Economy is in Italy, exploring the heart of Europe's economy, its small and medium enterprises and their fight to innovate into the future. On today's show, we'll be chatting with Emma Marcegaglia, the President of Business Europe and co-CEO of the Marcegaglia Group, about what SMEs can do to get more creative and grow into the future. We're, of course, in the land of fashion, so we're going to go shoe shopping and see what companies are doing to innovate for that growth. And, of course, check out the changing face of the finance that these SMEs can now tap into. 21 million SMEs like this glass factory. That's what Europe is made up of. That in turn feeds about 85% of jobs, like for the ladies right here. That massive jobs number then feeds further into the EU economy, which is huge. All that entrepreneurship allows us in Europe to control 1/5 of global trade. That's why it's so important for us to all to understand these economic powerhouses and why they're so critical.
Jack has a micro-sized glass-making company which employs less than 10 people and makes around €2 million per year. Jack then supplies his glass to Greg's small company which makes mosaics. Greg has earnings less than 10 million and fewer than 50 employees. Greg then sells his mosaics to Linda, who is a medium-sized mosaic and tile seller. She has 250 people or less on her payroll and her business makes €50 million. But if any of them are taken over, linked to or partnered with a large company, or are 50% owned by universities or local authorities, they may no longer be considered SMEs. Jack, Greg and Linda and others like them create 2 out of every 3 jobs in Europe. And businesses like theirs make up 9 out of 10 businesses in Europe, creating the added value that drives our growth.
Italy is mostly made up of micro-enterprises, like here at the Rialto fish market, employing almost 86% of all Italians. Now, hiring both before and after the crisis really slowed down because the value add that firms like these do, which means the value of the goods and services they produce in a region or an industry, say like fishing, was lower than before the crisis. Now, business confidence is up, but the recovery is quite sporadic across Italy. But as Monica Pinner found, there's a new energy amongst European SMEs to innovate and smart specialize in order to grow.
The Marche region is famous for its made-in-Italy shoes, and the local economy consists mostly of SMEs. Thousands of companies operate here in the footwear sector, employing over 28,000 people. That represents around 28% of the national total. This orthopaedic shoe factory near Ancona has managed to step over the economic crisis through smart specialisation.
What we did was we tried to invest in the product with even more technology and ongoing research. We tried to create a product that didn't exist in the market, and we focused on extreme personalisation.
The speed and the quality of this customised production has been boosted by digitalisation. Engineers are constantly designing new software to improve data collection to create customised fits. The old-fashioned measures and moulds have been replaced with a 3D scanner.
Research allows us to innovate production processes, transforming an artisan company like ours into an industry.
Making customised shoes has enabled the company to create new niches and open space in new markets, taking major strides to growth and employment.
A myriad of micro-companies support the footwear industry in the region. In Serra de Conte, an hour's drive from Ancona, Francesco Morano's business produces soles for Duna. To survive the crisis, a micro-company like his had to adapt.
The crisis hit my company hard, reducing sales. In the past, I had up to €2 million in income, and today we have around 500 to 600,000 euros per year. So I can't say I'm out of the crisis yet. Before, we used to do all the production internally, but now we outsource part of it to small external workshops.
To encourage that innovation, Europe's SMEs can now also tap into a dedicated €57 billion EU regional fund until 2020.
Joining us is a woman who knows all too well the challenges facing European businesses. She is the co-CEO of the Marcegaglia Group, president of Business Europe. It is, of course, Emma Marcegaglia. Over the last couple of years, have you seen SMEs really change in their strategy? Are they becoming more innovative and more smart?
The crisis hit very heavily the small medium enterprise, more than the big enterprise. What I saw on a European level is that most of the small medium enterprise are innovating more. They're trying to go to products which were more value added. The crisis pushed them to do better, to export, to innovate, to be more creative. So there is still a lot to do because the situation is still not so good in Europe and mainly in Southern Europe for most small medium enterprise. But I see some things getting better.
What's the biggest challenge right now?
When the crisis was so big, the attitude was more, how can I survive? The recovery is arriving. So I see for at least a part of the small medium enterprise the attitude to change and to innovate.
Does everybody have to go into smart specialization?
I don't see this division between very high technology companies and very traditional one. It's not a question of sector. It's a question that in each sector each company has to find its way to be more innovative, more creative, and also to make more research.
Let's take a pause in that conversation and continue our journey of discovery with Monica about the innovation that's happening in an area that was a bone of contention all through the crisis. I'm, of course, talking about access to finance and how even that is taking on a new face.
We are a Europe of small and medium companies who need to borrow to run our businesses. But how do you do that when banks now lend less? Monica went to Naples to talk to the director of the SRM Economic Research Centre to find out why businesses are now turning to funding sources outside traditional banking when the need arises.
The leverage of Italian SMEs is higher than in other European countries. It's 45% in Italy, while it's around 19% in France and Germany. The credit usually comes from the banks. It represents 69% of the whole financing sources.
A sweet arrangement, but not enough to sustain many businesses. So some SMEs topped up their finances with things like mini bonds, in which small companies borrow money from small investors. Or they got private equity investors or business angels to take a slice of the pie. And this experience is replicated in other countries within the European Union. At a European level, policy is now being shaped, making access to such financing easier. But what about on the ground? In Rome, we talked to Dario Scanepiaco, the Vice President of the European Investment Bank. Just last year, it lent some 290,000 European SMEs the money they needed for their business.
One of the challenges for Europe in this moment is to bring in investors to finance the real economy. We know that there's an abundance of liquidity, and the important thing is that this liquidity is directed to productive investments. We need well-established rules. Private investors want to know, for example, when infrastructure is made, what is the schedule and what are the costs. This is why it's very important that states adopt structural reforms that can give this kind of certainty.
With SMEs becoming more and more globalized, and with new scenarios emerging in terms of access to credit, they're revving up to get in the fast lane to growth and development.
Still with us is, of course, Emma Marcegaglia. This talk about business angels and private investors, venture capitalists. Is Europe really ready for these kind of investors?
There is a problem of culture still there. Some, family-owned company don't want to open their company to new investors. But I think we have to take this kind of street. We have to help also small, medium enterprise to understand that you cannot live only with bank loans. You have to open yourself to equity, to investors, to business angels. So we are not really there, because if you compare Europe with US, you still see a big gap. We have to make small, medium enterprise understand, but also big enterprise to understand that this is the way to do it. There is still a regulatory gap. In Europe, you have a lot of bureaucracy. We have to change this.
We saw this focus within the investment package. Are we that attractive as a market, and where are we lacking?
Maybe some months ago, a lot of people would say, no, Europe is not so interested. Now you see that the old Europe has a lot of products, but is more solid if you compare it with the BRICS, the Russia, China, Brazil. We have a solid base. If you look at what's going on in the world, you understand that Europe is still a place where you can invest. On the government, as we said, you need rules which are, clear, solid, but also on a business point of view, maybe you have to be more transparent, more open.
Do you think there's now too much reliance outside of the banking circle, so we have to rely on the private investors to get business going?
With the new rules, Basel II, Basel III, I think it would be more difficult for banks to make loans to very small, medium enterprise. So I think the access to equity, the access to the capital markets will become a need. So we have to prepare ourselves to this change. Europe has a lot of problems, but it's still a solid place. This is the way, this is the moment to invest, to innovate. Even though the crisis hits very badly, we are still a strong player in the world.
On that note, Emma, thank you very much for joining us, and thank you for watching. Goodbye.